Hey everyone, it's Rob B here with Rob D, and you are listening to the Property Podcast, and it is market update time. We'll be covering house prices. We'll be talking about the mortgage market. It is all over the place right now. The rental boom, which just seems to be continuing, and some common sense from politicians. Who knew?
Yes, welcome to the Property Podcast, where every Thursday morning we take time out from advising a multi-million pound property fund and putting together hundreds of deals for our clients every single year and bring you some of what we've learned along the way for free. And with the scale of what we and our team are up to, we've got a front row seat for everything that's going on in the news at the moment. And there is a lot, so we'll be bringing all of that to you today. And do make sure you stick around to the end, where I'm going to be revealing far too much about my pre-bed routine.
Just a quick note on Property Hub Select. If you've missed it, it's a new education frenzy that we're giving away to anyone who becomes a client, whether that's through Portfolio or Property Hub Invest. And the demand has been phenomenal. But that's understandable, because anytime we mention it on the podcast, things go a little crazy. So we last week mentioned that we are going to restrict the amount of people that we're bringing in each month, certainly through Portfolio anyway, and we've capped that at 50 people a month. And we're very pleased to say that in the next couple of weeks we'll be onboarding our next 50 people. So if you have inquired, you'll be hearing about that soon. And we're about to do our first masterclass, so that's really exciting. We'll tell you more about how that goes next week, but it's going to be on a subject Rob D is bit of an expert on. So plenty going on. And if you're thinking, what is all this about? Well, then go to propertyhub.net/select so you can check it out and find out all these amazing things we are now giving away to anybody who becomes a client of our services.
Okay, market update time for the month of July. We're going to be talking about the hot topic of the moment, mortgages, also rents, a fair bit of politics going on at the moment. It has not been a quiet month. If you think that the summer is going to be sleepy, I think you might be disappointed. Loads going on in the world of property. But let's start, as we always do, with house prices, where the big news is the lack of big moves. According to Nationwide, house prices were stable in June, no change. And according to Halifax, they were down just 0.1%. So we had a period of time a while back where the two indices were at odds with each other. Nationwide reporting falls, Halifax not so much. But now they're both showing flat prices for June. Rob, what do you make of this? Because at first, this seems completely at odds with what we're seeing all over the headlines, all over social media, all day, every day, which is that house prices are crashing.
Yeah, it's hard to make these numbers sensational, but yet they do try their best. And I understand it's their job, so they've got to. But there's not a lot to see here. Not at the surface level, anyway. What we're seeing here isn't that dramatic in these numbers that are being reported. But we're going to podcast on house prices and the crash or non-crash or silent crash, as we're calling it, in the next few weeks, because there's some really interesting data when you dig deep. Rob's already done a YouTube video on it, but we're really going to take it apart when we get to the podcast because it's super, super interesting. But these headline numbers are not that dramatic. Next week, we're going to do a halftime review of the year and just assess where the property market's at. So make sure you listen to that episode. But these numbers here, flat or down 0.1, there's not a lot of drama going on. A bigger number, though, Rob, is Zoopla are reporting that 42% of buyers are negotiating at least a 5% discount. Well done to those 42%. And with the average discount being 3.8%. Now, while the market is not crashing, based on those numbers we just discussed, you'd certainly would say it's a buyer's market at the very least. And therefore, you would expect in most areas to be getting a discount. And the data seems to suggest that is happening. But Rob, I say most areas because our observations of the market are quite interesting. There are definitely areas that are falling, without question. But there are other areas of the market that are more resilient. And I think that's another story that's not really talked about, which is why I love doing the market updates, because we can get into it a little bit more. But your national average tells you the national average, but that's not really that useful. What's really interesting is when you get regional and when you look at what markets are performing well and which markets are really suffering.
Yeah, so important to look below the average because, as you'd expect, London and the South East are not doing well. Whenever you see occasionally people posting listing with a series of reductions, it's basically always London, because that's the area that was the most stretched beforehand. Even though London had spent the previous 5 years as a fairly poor performer, it just went on such a run after the last crash that it's got the furthest to come down. East Anglia, perhaps surprisingly, is the worst performing region though. I don't know if that's because of the escape to the country effect after COVID, meaning that prices spiked there and are now coming down again. No idea. But among the best performers, Northern Ireland is the only region putting on a positive number at the moment, but the East Midlands, Scotland and Wales relatively among the better performers. And of course you can measure numbers at different points to see different things. So the Nationwide and Halifax data is showing what's happening at the point of mortgages being approved. You can also look at Rightmove data, which measures asking prices, so earlier in the process, which are also flat at the moment and show that buyer demand is higher than it was in 2019, which is pretty amazing. And they're anticipating a 2% drop in asking prices by the end of the year. So we've got all these different data sources and they're all useful in their own way. But we've got our own data sources as well, which is a bit more anecdotal, but we're out there very active in the market. We've got a team that's out talking to dozens of developers and agents every single week.
It's really interesting because we talk about regions, but then within regions, you have cities, obviously. And cities are performing differently. They're generally seeming a little bit more resilient than the more suburban areas. Manchester in particular, I wouldn't go as far as to say prices are on the up and up, but certainly holding firm and sales are strong. And that's important. Prices are one thing, but what's actually happening? Where's the market activity? And Manchester, there seems to be a lot of transactions going on there at the moment, particularly with the stuff that's a better quality. And this is reflected in the Home Track report with the city's index. Now, these numbers are not at the dizzy heights they used to be at. Nottingham currently is number 1 at 2.9% up. Birmingham second, Sheffield third, and Manchester fourth. Leeds fifth. So the type of cities that you would expect to see up there, all above 2%, not amazing numbers, but certainly better than the regional averages that you've just reported on, Rob. This is why I've already said I love digging deeper beyond that initial headline, house prices flat, or as the media would call it, crashing. I don't know how they get there, but they do. But beyond the flat, you've got London, which is really struggling, and then you've got places that are more resilient, like Manchester, Nottingham, Birmingham. So it is a peculiar market, but an average is an average, and you would expect some areas to be doing better than that and worse than that. And yes, the Home Track report reflects the other data we've looked at. London is in negative territory when it comes to house prices. So you can't go and cherry pick a report to find London's performing well. Every set of data we've looked at says that London is down.
So where to from here? Because prices are flat now, that doesn't mean that they won't fall in the future, of course. No one really knows, but we'll be talking about it more next week and revisiting some of our ideas from the start of the year to see how they've been borne out. But a big determinant in what happens next will, of course, be mortgages. Mortgages have been all over the news for weeks now, and they've been back in the headlines again because the average 5-year fix has now gone above 6%. That's the same level as it was at back in October when we had the mini budget and all the associated fallout. It had been dropping ever since then, but now because inflation is not falling as fast as people thought it would, and therefore the expectation is that the Bank of England will keep base rates higher for longer, it spikes back up again. Now that's just an average and there are cheaper products out there, but whenever there's a benchmark like that, the average crossing a meaningful number, of course that grabs headlines. And this is all bad news for the government, who are no more than 18 months away from an election, so need to start getting people feeling good about themselves, which this definitely is not. So Jeremy Hunt has been off to see the mortgage lenders, and they've agreed to a whole series of measures around delaying repossessions, allowing people to extend terms, switch to interest only, all things that actually they were required to do and would have done anyway. But it's good PR to come out of a room and say that you've got them to agree to it. But Rob, as you would expect, because of all the drama that's going on in the mortgage market and the fact that rates are so much higher than they were, lending volume is quite a long way down. And that's something that doesn't get spoken about so much. We're talking about prices, but those prices are based on a smaller amount of activity.
Yeah, lending is way down. It's down by nearly 35%, 34.9% on this time last year. And the second lowest monthly total we've ever seen since June 2020. So it's important to acknowledge that there's not a lot of activity in the market, and therefore, exaggerations can happen in the data because there's less people transacting. But also, I think the fact that people are also holding off is interesting, and I think the right thing as well. when there's a bit of volatility, which there was at the back end of last year after the autumn statement mini budget, we had a lot of volatility then, and we said, hold off if you can. And the interest rates going up by 0.5% caught a lot of people off guard, including the lenders, and they withdrew a lot of products at that point. So again, a bit more volatility. So over the short term, we've said, if you can, don't do anything. Some people might not be in that position. And it might be just a few weeks for things to settle down. I'm already starting to see more products come onto the market in the last week. So things are settling down, and maybe in a week or two we'll be back where we were a few weeks ago, which wasn't a perfect place, but it was more activity than we're seeing today because people have gone, wait a minute, what's happening? So because of all this action and all this volatility and all this drama around mortgages, we'll continue to keep you updated in these monthly market updates, but still occasionally bring you an expert in to the podcast to just talk about mortgages because there is so much going on. And as we know, it is so important to most of our strategies for property. And it is so important as a wealth building strategy for most property investors. So we will very much keep you updated month in, month out on what's happening. Are you the type of property investor that likes the best deals possible, but with a helping hand on the way? Let's face it, that's most of us. If that sounds appealing, then you should check out Property Hub Invest. It's not for everyone. In fact, it's not for many people, but for a certain type of person, Property Hub Invest is fantastic. They bring you exclusive deals that you will not find online, and Property Hub Invest is a team full of experts, people who really understand property investment. So if you want to find out more about Property Hub Invest and how it may be able to help you, then go to propertyhub.net/invest.
Let's move on to talking about rents now. So if the bad news for you as an investor is that your mortgage rate's getting more expensive, the good news for you as an investor is that your rents are going up as well. Rents growing at an annualised rate of more than 10% still, and rents are now taking up the highest proportion of the average salary in over a decade. Because for several years, wages were growing faster than rents, believe it or not, but now rents and just about everything else is growing faster than wages. And there's a piece in the FT, which we'll be linking to, along with everything else in the show notes, about the current rental crisis, much of which they put down to a lack of supply. It's really dramatic, the rate at which rents are going up and how hard it is to find anywhere to rent at all. Yet at the same time, there's not that much to say about it, because we've had this situation for months and months now. And although the rate of rental growth will come down, I do think we're going to be having similar headlines for quite a while. Something that hasn't had as many headlines, but I think is actually pretty shocking, is the fact that because rents have been going up so quickly and housing benefit has now been frozen for a few years, only 5% of rental properties are now affordable based on housing benefit rates. And that is just astonishing to me. Housing benefit always used to be set at a level that would give claimants access to the cheapest third of properties. So you're supposed to have access to a third of properties. Now it's fallen to 5%. And there's a story in The Guardian, which again we'll link to, about the understandable problems that this is causing. And I can see why raising housing benefit is not a popular move, because it looks like you're giving more money to landlords. But at the same time, in the absence of social housing, I don't know what else you're supposed to do. But from an investor's perspective, on the one hand, you've got rents going up. On the other hand, you've got all the uncertainty around prices and around mortgages. Which of those factors will win out in terms of sentiment? Well, Rob, you've got a story about this.
Yeah, I'm just really surprised by this data, Rob. It's really strong in the favour of investors being active. So I understand people who listen to the podcast, they get the information they need to make informed decisions, but not every landlord, I know as criminal as it sounds, listens to the property podcast. So Landbay have surveyed landlords, and they've surveyed over 1,000 landlords, and 4 out of 10, 41%, have said that they plan to expand their portfolio in the next 12 months. Now, remember, not everyone's always buying every year, so you would never expect that number to be 100%. So 40% is really high to say that we've got a portfolio already and we're going to build on it. Then you look at the more experienced landlords, the ones with over 10 properties, and 54% say they're going to buy in the next 12 months. That's really, really strong. So half of landlords who've got 10 or more properties are going to expand their portfolios. And they've surveyed some of the reasons behind that. And it seems to be one of the big drivers is that the noise of the big drops in house prices that we were promised by the media, or sort of reported on by the media, haven't really happened. And that seems to be giving landlords and investors confidence. And Rob, that really reflects what we've seen with the investors that we deal with. There's not a lot of nervousness in the market, and not just our investors. Speaking to other developers who work with investors, outside of us, there seems to be a strong appetite. I wouldn't call it, a mania or anything crazy, just a sensible appetite for doing good deals in this market and not being terrified of what's been reported. But I suppose if you keep getting told month after month there's a property crash and it doesn't then happen, well, at some point you stop believing it, don't you? And when you stop believing it, maybe then you make better decisions. So that data seems to suggest people are getting confident now and going to do something about it.
I think that's exactly right. And we've seen similar in the past when the whole Brexit drama is dragging on for years and years. It gets to a point where you're just immune to bad news because you're hearing it so often. And you realise, well, I can't just put things on hold indefinitely. At some point, I need to actually do something. So around last October with the mini budget, I think there was a lot of genuine fear in the market and people were nervous. And the reality of the situation now isn't that different from what it was then. But people's feelings about it seem to be very different because it's not some kind of emergency anymore. The world hasn't ended. It's just how things are now. And people are adapting to that. Something else, Rob, that landlords have perhaps got cause to be nervous about is politicians and their meddling in the rental market. But a bit of good news, because it appears like the Labour Party, in England at least, has lost their appetite for rent controls.
Yeah, it seems so. Lisa Nandy, who's the shadow housing minister, has confirmed that the party now opposes them, which is great news because rent controls sound like they would be a good thing for renters. And maybe in the very short term, they would be. But it causes a bigger problem. It causes a lack of supply, and we have a lack of supply already. And if you then punish landlords more and put them off from entering the market, then you'll have less supply again. And you'll then have queues and queues and queues for properties that come onto the market. And then what do you have? Well, you have people potentially being made homeless. And this is something that she's actually said, I'll quote, "And when house building is falling off a cliff and buy-to-let landlords are exiting the market, rent controls that cut rents for some will almost certainly leave others homeless." So, a victory for common sense. It seems like they've thought it through a little bit beyond the initial vote winner of rent controls to actually see that it wouldn't help beyond the short term, and actually, medium to long term, it would really punish renters. So, a victory for common sense, Rob. Wow. It's been a while since we said that when we talked about politics, but there we go. We've got one.
Astonishing. And the final story we're going to cover is from the BBC, which links into what we've just been talking about and the lack of rental properties and a lack of supply, because it's around landlords' lack of appetite for taking on tenants with pets or indeed with children. So they've got some interesting data because on platforms like Rightmove and Zoopla, you're not allowed to say no to pets or families. You can, of course, choose not to proceed with those applicants later, but on the platform itself, you can't express a preference. Whereas on a smaller platform called OpenRent, you can express a preference. And when allowed to do so, a quarter of adverts said that families were not allowed, and 73% said that pets were not allowed. So this is interesting, because you can block preferences from being stated in adverts, but you can't enforce the eventual decision. So the fact that you've got an insight into landlords' preferences and those preferences are so strong suggests that when there is a lack of rental supply, certain categories of renter will really be struggling. And of course, the Renters Reform Bill is attempting to do something about this by mandating that consent for pets can't be unreasonably withheld, but we don't know what form that's going to take or what that really means. But I don't know what to do about this. I don't have a solution. Like rent controls, there is no quick fix you can use here. But I thought it was just a really interesting piece of data that reveals something about the state of renting.
And it's not a state I think anybody wants to see. Things can definitely be improved. And whoever wins the next election, let's hope they can push the rental market forwards and make it more attractive. And if you can make it more attractive at both ends for investors and for the tenants themselves, it doesn't have to be a versus battle. If everyone focuses on the win for both rather than punishing each other, then I'm sure we will get to a better place. And of course, the reality is that you've got a few bad landlords and you've got a few bad tenants, and they exist, both of them. But unfortunately, the attention tends to be focused on those individuals rather than the majority in both sides, who are just lovely people. Before we head off, let's give you a bit extra, where we give you an extra resource each and every week. So this week is no different. Rob, you've got a brand new YouTube channel. Not you personally, just one you've watched that you want to recommend to us all. You haven't told me what it is yet, so pitch it. What have you got?
I'm a bit obsessed with Tom the Taxi Driver, I must admit. So this is a YouTube channel I found recently.
I'm not sold by the headline, Rob.
It's And you might not be sold by the content. It is just a guy called Tom, who is a taxi driver, who puts out various videos. But the ones that I love are the ones where he basically vlogs his day, and you can follow along every single pick up and drop off and he'll show you where he picked someone up, draw out on a map for you the route that he took and why he chose that route. And I just find it weirdly compelling because I'm always recognizing places that I see and going, oh, I wouldn't have thought to take that route. It also reveals a lot about London and what people are up to and when they're doing it and the hidden patterns of what's going on in the city. And I just find it bizarrely compelling and relaxing at the same time. So that's been my pre-bed watching for the last week or so. I admit this is probably one of the more niche hub extras we've ever done, but go check it out. Tom the Taxi Driver on YouTube.
I think it reveals a lot about Londoners, Rob, and quite a bit about yourself. That's
Fair.
an interesting resource. Just through pure curiosity, I will go and check it out. You know what? I'm actually going to ease off on you because I have found myself watching, on the odd occasion, I wouldn't say religiously or for pre-bed entertainment, but I have watched Deliveroo drivers and watched their day and the jobs they pick up and where they go and what they're delivering, which I don't know why I also found really interesting. But then I thought I probably should stop watching this. What am I doing? But it feels like you've not reached that point with Tom and maybe he's doing a better job. So out of curiosity, we'll check out Tom the Taxi Driver.
We should never let anyone see our YouTube home feed. Like what that algorithm is recommending to us will be far too revealing about our personalities.
I think we should do that. That'd be so funny.
Let anyone catch me logged in.
Maybe at Christmas we'll reveal our YouTube algorithm recommendations. But what we do recommend is that you come back and join us on Tuesday for another Ask Rob and Rob. And as we've already revealed, next week is our half-time report. What has happened in the property market so far this year? It's easy just to let the year run away, right? Before you know it, the year is done. Well, let's pause. Let's look at what has actually happened in the property market in the first 6 months so we can make better decisions for the remaining 6 months. So make sure you join us for that. So until then, take care, have fun. Bye-bye.
Bye-bye.